Welcome back to the channel. I hope you're having a fantastic weekend wherever you are around this beautiful planet of ours. Today, let's look at the end of week wrap-ups and whether this low can hold. We have discussed the low yesterday, looking at significant signals for yesterday's candle across traditional markets and Bitcoin as potentially being that low we have been anticipating for the markets to come in October, as per the analysis throughout the year, looking at cycles. So let's dive into that a little more today. There may have been just a touch of confusion in yesterday's video, but we'll get into that today and just pick apart things like the volume, the pattern, the price, what we can expect from this point. And of course, it's a weekend, so the traditional markets have closed and Bitcoin essentially goes quiet over the weekend. It's like everyone takes off and goes enjoys their weekends now that Bitcoin is a big market to trade in the futures game. All right, if you haven't already, smash up that like button, subscribe, bell notification icon so you can let YouTube know you want to see more of this and less of that. Last couple of shills here. My Instagram, I'm posting the reels out there with your questions. So if you jump on my Instagram, I do a Q&A and then I'll answer the Q&As in some short reels. So you get like a nice full answer over there. And of course we have the trading strategy that's going to be exclusive to TIA Crypto, so this channel and Michael's channel. If you want to get a piece of that, you have to sign up using the Bybit link in the video description here or the BitGet link, just depending on where you are around the world. And everyone can sign up to both and get yourself up to $12,000 to $13,000 of sign-up bonuses. Use the links down below because you'll get more than what they're showing on the website here. And if you're still unsure for that, there is the free alpha report, the newsletter here that comes out once every 2 weeks to your inbox. So heaps of stuff in the video description. Make sure you use that. Do not get scammed out there and use the official links in the video description. All right, guys, let's have a look at the end of the week. We had the 13th of October low so far. This has been the most significant low that we have seen in the bear market. We have the end of week wrapping up. We're starting with the S&P 500. To make it extremely clear, this is the market that we have been waiting for a low around the end of year. And of course, it's coming in October. We looked at this with the Bitcoin prediction analysis in our video here on the channel. So I'm expecting a low. We're not guaranteed it just yet. I've said that many times. I do still remain with the view that this is the bottom of the market. We are floating around the bottoms, at least definitely for Bitcoin. And for the S&P, I'm pretty sure we're around those lows now based on many things like bouncing off the major 50%. We had a very, very big day up on Thursday. Yesterday, of course, has pulled back quite significantly. However, we're still holding above 38%. Now, I always use the 50%. But in this case, we did have a very big move up very, very quickly. It was volatile. So we tend to expect a little bit overcompensation to the opposite direction as well when these sorts of things happen. And that's the low so far, the 13th, the big bounce, the drive back. What I want to see is at least the S&P to hold above 3560-ish, maybe 3550-ish. It's basically all of these previous lows here. You can see we got a low at 3580. We got another low at 3568, 3568, 3573. So you can see that there's a bit of a support level starting to form there. And the 38% level here is basically 3575. So 3,575 points for the S&P. Now, we did get rejected from the price gap. I mean, that's generally typical until we break through it. So there is a resistance level there. We noted this price gap once the market formed that island reversal and continued down. Now, the other thing to note with the S&P, if we bring it back to, we've got our daily chart here as well, one of the biggest days, there was a note about volume coming in and there wasn't enough volume for the particular pattern. However, it seems like there's pretty decent volume at least here, but I've even got better volume signals for the Bitcoin futures chart, which we'll look at in just a moment. But I just want to go through and just cover, say, the volume and then also the pattern and the timing around those and also through those cycles as well, looking at things like 2002, 1992, 1982 in this period of October. So just going back to that Thursday bar, the volume is reasonably significant when you look back over the course of this low period. June was around 3,600 points. And as I've talked about, I believe around the 36, the 35, maybe even down to 32 is basically that bottom trending area. Okay, so that's what we've maintained since that final dump in June into those lows there of around the 17th of June. So the volume from Thursday, you can see here was this bar right there, and it is the second highest since that September bar. But then if you go even further back, it's the third highest since the June low, which was extremely significant. So that's this level just here. You can basically say it was the fourth, but it's in those top four within the last 4 months. Go back again, you got one more bar here, so it's the fifth, and then you keep stretching it back. It is a very significant day of volume. Why do you keep going on about volume? Well, this is just letting us know what the smart money is doing. We got to look for significant days of volume to give us some sort of indication of what we might anticipate. And like you can see with this significant day here in June, we had very, very strong volume, and the market basically bounced away from that point. Now, could it happen again? Sure, we bounce away. Maybe we get rejected again at 38 or somewhere up here around 4,000, and we come back down over the course of many months. I've maintained that I think the low is going to take several months. We're going to be in a range. That is just to be expected after a significant pump, very, very significant pump from the pandemic low to the 2022 top, and now the correction. We're still within correction territory here, and it was one of the biggest days. Let's look back on a weekly chart just at those low periods for October in the market, and we'll start back at the GFC here. And in terms of timing, the market dumped in September. This is when Lehman Brothers collapsed. It was all over the news. You can tell now that we're getting similar sorts of signals like that, people going on about Credit Suisse collapsing, all this sort of stuff, which actually hasn't happened. It's just more for news headlines. It's just why we don't pay that much attention to them. We're just looking at the timing here in terms of cycles. But you can see we got the dump into October. We got a bounce in October, another little dump in November, and then that final move into March. Now, I'm not saying that that is what is going to happen right now in terms of low after low after low, but we could see lows, significant lows, form after a bit of a pump up. We know when we get October, November, like we talked about in the prediction videos, go up to December, and then you start to see a low form, and those lows don't necessarily have to look exactly like this, but what we've seen now, we've seen a June low, we saw September, October, and maybe we move up, and then we get a December or January low that's slightly higher, move up in February, and a March low, and then the market starts to move. So it doesn't have to look like that, where each has to be lower than the other, but we could see something that represents lows around those similar sort of periods, or at least in similar sort of timings here. So let's use a timing tool, and we've got low to low is about 6 bars, which is a week here. So that's 1.5 months. Going to the next low, it's about 21 bars. So that's about 5 months. So that's from the significant news sell-off to the final low. And in terms of percentage, it's still significant, going from 870 points to the low of 670 points. But over that course, if you were DCAing in that period, you're not going to be worried when you look back a year or two from that point. And just to show you the extent of the bull market from there, not saying that we're going to get another big bull market like this. I don't think it's going to happen that we get this huge run up from those lows. But you won't care if it's around this low right now, and you get even half of that moving forward into the second half of the real estate cycle. So I know I've gone a lot on about this particular low. I wanted to cover the volume, the pattern, the timing, which I think is important to note, because this period could be several months. Maybe we have to count from June, that June low, or maybe we're counting from October. We'll wait and see where this pump up heads to, and then obviously declines from that point. But if we go from the low to that final low, look, about 5 months. And if we are looking at June as being one of the lows, and now we're in October as another low, that only really gives us another month or two from this point. So just counting from September low here of June to the current low, 17 bars, we got another 4 bars out or so. That brings us into early November. So maybe we're already in that final low period. Maybe there's another slightly lower low. But overall, I think this is the period that we have been waiting for. Give it a few more months and you start to climb out from that point, just like what has happened in the previous low. And then you've also got October of 2002, the 20-year cycle anniversary here. You can see the counts again. This is July low. Then you've got the October low, the market bouncing heavily out of October, coming back down into March, and then it took off from that point. I think it's potentially going to represent something a little more like this. Obviously, we'll wait and see. But look, we got a pretty significant 20-year cycle playing out here. October low, nice bounce into December, fall away in January into that March, move away. Let's see what happens, but at least we've got something to work towards moving forward with the S&P. As for the low on the Nasdaq, it is slightly weaker. It is down to the 38% level, which means there's a 61% retracement here. Possible retest. We've had this on the chart for a while. I've been looking at that 10.6 because it lines up very well with the previous support levels back in 2020. So for the Nasdaq, I think it's weaker, so it has the potential to fall a little bit further. If it doesn't bounce up strongly from this point and break the bear market, then any sort of move on the downside to the S&P, should it hit some resistance, would probably be weaker on the Nasdaq. Like, you would probably see further or more losses on the Nasdaq than you would on the S&P, and that might get you further down to 10,000 or below 10,000. But right now, we've still got that hold up here. So for the low, wait and see for the Nasdaq, but I'm not as confident on the Nasdaq as I am for the S&P, which then leads me over to BTC, the BTC futures chart. And I want to hit the volume here right now. Look at the volume on the 13th. Now for the futures market, this is not traded on the weekend, so it's closed now, whereas of course we could go into Coinbase or Bybit or whatever, and you could still be trading Bitcoin. But just looking at the futures market, daily chart here, this is the low. On the futures market, the 13th was the low for Bitcoin. You can see this is back in June when the other markets load, so Coinbase or any other 24-hour market. It's around the 18th, 19th of June. But for the futures, that was actually just 2 days ago. So we got that significant low there. We have a significant amount of volume here. So the futures market, CME, look at the volume here compared to the rest of its history. There was only one other day. No, this is the highest day in 2022 for volume. May on the dump, that was the 2021 massive crash, the one I went live for, and we had over 20,000 people join us on that live stream in May. If you were there, let us know in the comments down below. Give us a little emoji saying you were with us. That today or yesterday's volume is second only to that May dump volume, and from that May dump, sure, the market went slightly lower, and yes, you're going to have people say, well, you were wrong or whatever. Like, I didn't call the May bottom, but if someone said this is the bottom and the market went slightly lower, they'll be called an idiot, you missed it. But really, you don't really care about getting the exact bottom. You just want to be buying around the bottom as close as you possibly can with your own analysis, and then riding that market back up to somewhere near the top where you take profits. You don't have to get the exact top. You just need to make a chunk in the middle. I know I say it often, but everyone tries to catch the low. And for a particular asset, like Bitcoin, I'd rather be trying to get around the lows and then selling around the tops. I don't want to buy the exact low and sell the exact top. Too much effort for not enough reward, meaning you'd have to put a ton of time into it to try and figure that stuff out. Not worth it. This is around the lows, good enough for me. I'm going to make a profit. So yesterday's bottom for Bitcoin futures is second only to that May crash low. And if we take another step back, looking back in history, in the entire history of the CME futures in terms of volume, you can see right here, the only other days that come into that compared to it were back in the mini bull market of 2019. So you've got a pretty significant amount of volume there on top of the bear market downtrend that has now bounced off the bear market downtrend as support. And sure, we haven't moved up that much from it. Maybe this is one of those last opportunities before some of the FOMO kicks into the upside. And yes, maybe we fade out again like on the S&P and we get a nice little pullback into January, February. Who knows, right? But if that happens, you'd definitely see some FOMO. If we see the pump up, you'd definitely see FOMO in that pump. And people say it's never going to be under 20 grand again, and cycle rinses and repeats while we churn through the low prices of the potential accumulation. We don't have that confirmation yet of the breakout, but we're in an assumption that this could be the accumulation period, which is why we are buying at these lower levels under that 19.5K. And a lot of those signs are pointing towards it being a good looking low. I'm hesitant to say that it is the low because I honestly do not know 100%. I'm just basing it on some of the facts from the charts here, the data in the what we could see from history as well from the data. And so far, so good. So that was the Bitcoin futures market. A quick look at Bitcoin 24-hour trading here on Coinbase. Now, this little pattern here, we're on the 4-hour chart. It also looks reasonably okay, provided we remain above these lows here at about 18,900, call it around 19,000 for a round number. But this isn't such a bad looking pattern. You got the pump up, you got the pullback. The market is trying to find some support at 19K. Maybe it dips its toes a little bit lower. But we've got the weekend here, and obviously the volume will drop off from this point. So the 24-hour markets, not looking so bad as well. You can see it's pretty significant volume for a 4-hour bar, bouncing off the bear market downtrend, using it as now support, whereas before it was resistance. You can see we've covered it so much, how long this was resistance, and now it is holding it as support for now. So this is all looking reasonably good in the very, very, very short term. So let's see how it plays out, of course, over the coming months. And this is around, I think it was the third highest low. So around 18,160, we had 18,150, and then back here was around 18,600. And of course, that major low at 17.5K. We're basically around those levels with very high volume. 4-hour chart shows that it was the highest volume all the way back to May again. Look at that. It was even higher than the dump in June. So pretty significant volume, even though the range was relatively small compared to the rest of this trading area. But overall, it is acting. It is looking like a reasonable low. Let's see if it can build into something bigger across the week. So we need the week to close on Monday. So make sure you're joining again here on Monday morning. Like and subscribe, bell notification icon so you're updated on Monday. And before we go, a quick look at Ethereum. I'm not as sold on Ethereum yet, although it is holding at a higher low. Just these multiple bars here. It just needs to get a bit of a kick on relatively soon. It's good to see that the closes are remaining above the $1,280, so $1,280. That's a good sign to see, and now we want to see it just bounce away when the volume comes back next week. Otherwise, look, that little bit of a low could be in trouble. However, at least we've moved away from these particular lows here at $1,880. As for ADA, the flip side, this is the flip side. I don't think ADA is going to hold out. I don't think it's going to be back above 60 cents, which is up here anytime soon, back down at 36. This is much, much, much weaker. Look at that low that came in May. You can see that it's fallen beneath it, acted as resistance now on the daily chart, and any sort of moves up that happen with Bitcoin might be overall less to the upside. And when Bitcoin falls, has those corrections, it's going to be harder hit in ADA because it's in a far weaker position overall in the macro chart here. And I still think ADA is looking like it's going to be falling into these teens to lower 30 cent areas. The only thing that can save ADA from this is if it gets back above all of those previous support levels relatively quickly within October, and then back above 40 cents and starts to consolidate above 40 cents. Until that happens, ADA's probably in trouble and probably going to head lower. Not looking at buying or DCAing into any of these altcoins. Bitcoin, different story. Not an altcoin, looking relatively good at this point. Like, subscribe, hit those links in the video description. Bybit and BitGet. We got the exclusive proprietary trading strategy coming out for guys who are signed up with these links down below. BitGet, Bybit, and if you're a member of ours, stay tuned. We'll chat with you guys on Monday morning. Otherwise, for everyone else, join the investor newsletter here, the free alpha report. And of course, I'll see you on Instagram as well for some more reels talking about crypto, Bitcoin. And of course, you can check out the old family travel pics here as well. Guys, have a fantastic weekend. See you at the next one. Until then, peace out.